And welcome back. Bruce Porter joins us now for this week's Dollars and Cents. Bruce, it was tan and blue, not gray and turquoise today.
I know, I missed the memo.
Right. Okay, we're going to talk about retirement, a portion of retirement, but I know you want to cover some basics to start things out.
Yeah, so we're going to talk about how, Social Security, it's a big question. Yeah. It normally makes up about a third of our retirement income, sometimes more. Depends on how well you've prepared prior to retirement.
Right.
So now let's talk about some basics. The FRA, and you'll see that a lot when you're looking at retirement stuff.
Right.
FRA is the full retirement age. So it's depending on your date of birth that will determine what your full retirement age is.
Okay.
And the PIA, in the Social Security jargon, is the primary insurance amount, or the amount that you would receive based on your date of birth.
Okay.
And the age that you take Social Security. Because we all know we can take it early.
Yes.
As early as age 62. So if you do, though, you're going to have a reduction in your PIA.
Yes.
Because that's a lifetime payment.
You can take it, doesn't mean you have to take it.
That's right.
And the longer you put it off, you're getting more benefit from that, are you not?
The longer
in a sense.
Right. Your primary insurance amount is going to be reduced if you take it early.
Right.
Because they look at it, we're going to have to make a payment further longer because of age, people living longer. So if you take it early, it's going to be reduced. If you take it at FRA, that's your maximum benefit based on your date of birth at that point.
Okay.
And that's your primary insurance amount. Now, you can defer past age FRA. For me, it's 67.
Yeah.
For you, based on my date of birth, I'm born after 1960. All right. You were born prior to 1960, right? And so when you're born before 1937, the FRA benefit at 62 is going to be about 80% less than the full retirement benefit.
Right.
Now, if your FRA is 67, like mine is, if I took my Social Security at 62, it's going to be about 70% less.
All right.
Okay? So the longer that we defer taking our Social Security, the higher it goes.
How long can you defer?
You can defer to age 70, and it's between a 6 and 8%, depending on your date of birth. It's going to be about a 6 to 8% approximate increase every year until age 70.
And you mentioned just like, a couple of minutes ago, there's also another benefit, once you pass that age, as far as other ways you can make money. I mean, you can get a job if you want.
Sure. Once you get past FRA, full retirement age benefit, you have unlimited resource of income without penalty. Prior to that, it's $1 for every 2 in the last year before your FRA.
Wait, say that again. It's $1 for every 2?
$1 penalty for every 2. In the last year, it's $1 for every 3. And so they want to encourage people, if you take Social Security early, they're going to restrict your earnings. If you take it after FRA, you're unrestricted. So you can get a job if you're bored in retirement and continue to work.
And this is all good information, but of course, this is one little part of retirement. You need to plan ahead, and that's basically how you can help people out.
That's right. You plan ahead, because if your provisional income is too high, and that is half your Social Security plus your modified adjusted gross income.
Right.
If that's too high, then possibly you're going to have taxation on your Social Security. So if you are a single taxpayer and you make $25,000 or less provisional income,
right,
that is half your Social Security plus all other income,
right,
then you have no taxation. But if you're between 25 and 34, half of your Social Security is going to be taxed at your current tax rate.
Right.
So if you're in a 12% or a 10% tax bracket, that is subject to tax, all right? Now, you got standard deductions and all that. If you're above 34, then 85% is taxed. Now, if you're married, it goes up.
Yes.
You're allowed to make up to $32,000 of provisional income without taxation. But if you're between 32 and 44, that's half your Social Security plus all other, half of it is taxed. And if you're above 44, 85%. So it pays to do some planning and to figure out where are we going to fall when we need it.
If people want help in planning, how do they get a hold of you to be able to get this information?
ResourceCenterInc.com, or easiest way, call the office, 882-1800. Be glad to sit down, drink some coffee, and discuss it.
Talk to
It's
Bruce.
complicated.
Yeah, plan ahead. Thanks, Bruce.
You bet.
All right, we'll be right back after this.